It's Wednesday, April the 10th, and as you notice, to my left is EJ O'Keefe, and obviously, I'm Gib. We're going to do a new segment, and we're going to do it on a monthly basis, and that segment's going to be called "What's Hot and What's Not," and we're going to be talking about sectors, specifically sectors within the S&P 500 that we're favorable towards, and those that we're not very favorable towards, and go into why. We want to try to keep it in that 4 to 5 minute range so that we don't bore you to tears, but at the same time, we would like to educate you. And as I said, we'll be doing this on a monthly basis, and hopefully, you will be tuning in to find out kind of the directions that we may be going as far as investments. Start with what's not hot.
Based on what came in hot this morning.
Correct.
And that was CPI came in.
Woo, and it
quite
came
hot.
in hot. And so I'm going to be talking about the sector, which is utilities. And utilities for a lot of our folks are nice, very comfortable places to be. You know, obviously we have a lot of you have that in your portfolios. You may have started buying that stock back in your 20s, and it's just accumulated through the years through dividends repurchasing. So it is a sector that we like. It only makes up about 2% of the S&P 500. But when you are in a very low interest rate environment like we were in pre-COVID, and you have a yield that may be over 5% for some of these utility companies, it's a nice place to park some money, get a little appreciation usually, and you have that benefit of having a stock that's relatively conservative. What it doesn't like, that sector, it doesn't like higher interest rates. And lo and behold, you know, we've gone through 2.5 years of interest rate increases, or at least being higher than they have been in 40 years. So we haven't been pursuing utilities because interest rates have gotten so high. And when they get as high as they do, you as an investor can say, you know what, I can buy a treasury with about the same yield, and it's guaranteed by the government, so I don't have the risk of the market or the risk of that particular company. So it's not necessarily a very good environment. Today made it worse. The sector itself was down over 10% in 23. It had rebounded recently. I think it was up 4 for the year, and it's down 1% today because, again, of the numbers that were released. So it doesn't like higher interest rates. It likes to have lower interest rates, because the second reason why this isn't a good environment for them until the Fed starts lowering rates is that's a very capital intensive industry, and they have to borrow so much money during the course of a year or 2 or 3, and to do repairs is very expensive. So you have the higher interest rate environment they're in, which is cutting into their profit margin. So they're wanting lower rates so they can refinance and get this debt refinanced at a lower rate. So for us, utilities, while they do have their place, it's not something we're looking at purchasing right now. So the sector utilities, no go for us for now.
On the contrary, an area of the market that is hot that we are giving consideration to and have given consideration to over the last 12 months is communication services. One of the big things, and Gib just mentioned it, in a higher interest rate environment, which we're in this morning with CPI, yields are going up again, are companies that have really good free cash flow. A lot of the individual companies, and we can't talk about individual names on the video, if you call us, email us, be happy to have that conversation, do a really good job, those companies, in producing a good free cash flow, which means they're making money. Also, a tailwind for those companies, they're your streaming companies, some social media companies, some news, cable companies, and some search companies. Well, 2024 just happens to be an election year. So eyeballs are going to be on the news or putting in what a candidate believes in a search engine, or political ads that I'm sure no one has seen so far. So that is an area of the market that has performed well. Year to date, it's beating the S&P 500 by about 4%. It's up 13% year to date.
It's beating technology too,
And
right?
over the last year, everyone likes to talk about tech and AI. It's done really well. Communication services over the last year, 12 months, is actually beating technology. We think it still has a tailwind at least through the end of the year with what's been going on in sports, the Super Bowl record numbers, NCAA Final Four just finished up, record numbers, especially in the women's game. Miss Caitlin Clark drove heavy numbers. And then you have the presidential election going through November. That should be an environment where those communication services and those companies that make up communication services continue to do well.
So there you have it. You have a sector that we're not really interested in at the moment, that being utilities, and then communication services is a place that we would look at. Now we will be looking at the PE ratios. We'll be looking at a lot of those individual securities in that area, and if it looks like they've run too far too fast, which probably a lot of them have, we're going to wait for them to come back to us. So that's our first, or our inaugural run at what's hot and what's not. You'll see us next month, but always remember, it is your money.
And your money matters.
We'll see you next month.